good evening, everybody. Welcome to Verified Investing Live. My name is Gareth Soloway, Chief Market Strategist and Pro Trader here at InTheMoneyStocks.com. So, as I always say, folks, I do hope everyone had a wonderful weekend. We are getting close to the holidays. I do wish everyone a wonderful, happy holiday as we get into Christmas and New Year's here, and really the end of 2021. Really remarkable how fast it has seemed to go this year. All right, now looking at the markets, we are looking at a market that had a pretty steep sell-off on Friday. The S&P 500 filling a major gap right down here on the SPY. So that is worth keeping an eye on. There's no doubt about that, right? One of the things I'm keeping an eye on for tomorrow. So number one, we're keeping an eye on the futures, which are just opening here. And right now we're opening slightly higher, but not up enough to really secure a no-brainer bounce in the markets. But again, considering we filled the gap, there is a chance of a bounce. I think you did see some selling on Friday that was partially due to options expiration, as well as coming into a weekend where the markets are closed for a couple days. Anything could happen. And then once we get through the weekend, and if the world doesn't end, sometimes the markets tend to bounce back just a little. Ultimately, I still think we're going lower, but I think in the short term, you might get a little bit of a bounce here and there, especially as we get closer to Christmas and New Year's, with volume usually getting lighter. Doesn't guarantee it by any stretch, but usually we see lighter volume around those big holidays. All right. In terms of support on the spiders, you still have the gap fill, which was filled on Friday. So technically that level is still support, but not as good as it was on Friday. The market did bounce off of that before closing above it. If we do break to the downside, your next major support is going to be right down here at this pivot low, which basically will also be this upsloping trend line. So there's going to be huge support right in that range if we continue lower. Now that is around 450 on the SPY. So I mean, it's still, $11 lower than where the market's closed on, or $10 higher, lower than where the market's closed on Friday. But again, that would be your next major support if we start to break down. Doing a quick check on the futures, which have just opened a minute or two ago. S&P futures up 9 points, Dow up 70 points right now. Oil is trading down. Actually, I'm not getting the new quotes on oil yet, so I'll let you guys know as soon as I start seeing some new quotes on oil, as the first trades are just coming through on this Sunday night. All right, going to the Qs chart real quick. Let's take a quick gander there. Qs, same thing. We hit some good support on Friday. This was the former pivot low right here, which matched up to the former pivot high right over here. That continues to be support. If we break through that, this would be your next spot. And notice the upsloping trend line coming right up to merge with that level. Again, that's right around 373 to 374. So a decent amount lower as well. I mean, you're talking $10, $11, $12 lower on the QQQ as a potential move to the downside. All right. Let me see what else we have here. I mean, overall, it's a market that continues to be very volatile. I think you may quiet down around the holidays, but for the most part, volatility is here to stay based on the fact that you have the Fed tapering. That's going to bring more volatility into the market because valuations are now suspect with the Fed pulling back. Interest rates will continue to be wild and kind of hang on every comment from the Federal Reserve and its board members. And then also you have, multiple other factors. Are earnings going to start to slip? Is the economy going to start to get weaker? Is inflation going to get worse? I mean, all of these kind of question marks are out there, and the market doesn't necessarily have firm answers to any of them. And that is going to create more uneasiness as opposed to 6 months, a year, 2 years, 5 years ago, when, let's be honest, the Fed was always there to catch this market, right? Always. The market was always there, or I should say the Fed was always there to just catch the market no matter what. Now the market's starting to wonder, are they on their own a little bit? Now that inflation is much, much higher. Remember, when inflation was up under 2%, the Fed could do whatever they wanted to do. They could print trillions of dollars, which they did because inflation wasn't an issue. Now, with inflation where it's at, you print trillions of dollars, you're going to just drive up inflation even more. That is problematic. All right. We'll get into some questions on this fine evening. First question from Edward saying, Merry Christmas to you and your family. Thank you, Edward. I appreciate that. Same to yours. Same to you and yours. Thanks for great advice this year. Could I ask you your opinion on Chipotle Mexican Grill? Absolutely. Let's take a look at CMG here. CMG has had a pretty sharp fall off of the 52-week highs, which were up near the 2,000 marker. It's trading just below 1,700. You do have a sloppy bullish pattern here. I noticed the low here. I think it's so cool to see. This was a major gap fill right there, and that happened to be the low. So you kind of could see that bounce coming. Now the question is, can this bullish kind of very sloppy? And I think it's important to recognize that it's not a pretty bull flag. Pretty bull flags would have higher probabilities of playing out. This one's a little sloppier, so it's closer to a 50-50, but nonetheless slightly shaded to the bullish side. If it does trade up, you're going to have upside to this area right here. This will be a big area of resistance right up around 1875 or so. If it starts to fail and breaks below this short-term support, you have significant downside on the charts. My guess is the next big support would be down here around 1300. So for me, it's probably a no touch because the probabilities aren't good enough on the bullish side. And at the same time, I still think the stock is ridiculously valued based on, if you compare it to almost any other fast food chain out there or anything like that, its multiple that it trades at is far beyond any of those. So I do think at some point it has to come back to reality. It's been one of the darlings of the fast food industry in terms of valuations, but eventually it has to come back to earth. All right. John saying, any advice on the real estate market? I got to sell. Should I expect interest rates? What should I expect from interest rates when they could hurt the value of homes? Yeah, I mean, essentially you're asking real estate projections. I mean, that's always a tricky thing to do, but I do think in general interest rates will stay here or trend up in the near term. Generally, that's going to be slightly worse for the housing market. The biggest issue for me with the housing market is just that you see the same things going on that you saw in 2007. So you see loans that are going to people that probably shouldn't get loans that are very, very big. You see valuations ridiculous. You see buyers bidding $100,000 over asking. I mean, all these type of things match the liquidity bubble that's in the market. It's in crypto. You name it, it's out there, and it is flourishing. Now, it's starting to crack. We've seen crypto start to crack. We've seen the stock market start to crack. Now, the real estate market, I have seen indications that it's starting to crack as well. I think when you get a major deleveraging event in the system, it's going to affect not only the stock market and crypto, but it's going to affect real estate as well. So I still have it priced in that you should see real estate down 20+% over the next few years. Even at down 20% or more, it honestly doesn't take it down that much compared to where it was even 5 years ago. So I think that's an important factor as well to keep an eye on. Now, could it turn into a bigger issue where real estate really, really plunges? Yes, but we would probably have to go into a pretty nasty recession that would really make it harder for people to pay their mortgages, and then you start to get these defaults, and I mean, it would be a chain reaction, much like 2007. Eventually, that will happen. I just don't know the timing on that because obviously, that's the toughest thing to figure out exactly when the dam will break. Anthony saying, what do you think of Pirate Chain, ARRR? I love that R as the symbol for it. Let's take a look. I am not getting a symbol on that. Are you talking about crypto? You might be talking about crypto. I don't know what you're talking about for a swing trade on that. But yeah, I'd have to go bring up some other crypto charts on that front there. I have AR and ARRR, but that's about it. So we'll take a look at that another time. I'll have to, just be a little bit more specific on if it's a crypto. And again, I don't really have the cryptos have to be traded via futures from my TradeStation platform to show them. Otherwise, I have to flip over to a different platform to analyze them. All right. TUR, Landon mentioning it's back to the lows. Any thoughts on a long? Yeah, I mean, we know what's going on with Turkey. It's print money, devalue currency, etc. It has gone down to new lows here in the near term. Let me flip over to the weekly chart. Yeah, I mean, this is basically at lows. The only positive thing you have on this chart is that you do have a trend line that you could make a case you're almost at. So if you connect this low, goes through here to this point, you can see you're getting very, very close to that down-sloping trend line. So you would anticipate a bounce there at that point, okay? So again, it looks like it could have a little bit more downside, but we don't know, again, how much. And by the way, folks, futures have turned negative, down 5 points now. Not a big move. Again, all in this general flattish area, but interesting to see that initially we were up about 10 on the S&P, now down 5. At Dow is now down 70 on the day versus being up 70. Oil is trading down sharply, down over $1 here. Nat gas is flat. Gold is up $2. Silver's flattish on the day as well. So we are seeing a little bit of a little bit of a sell side bias here initially on the futures. The question again is, does it hold? Now, it was a pretty nasty sell on Friday, but again, Markets overall, remember, very short term, you could get a bounce around Christmas. That's nothing new. That's happened in the past. But overall, we're still in a down cycle. Remember that. So ultimately, bounces are selling opportunities. Markets should go lower. Be interesting again to see how things trade tomorrow. The first Monday, the last Monday before Christmas, basically. All right. David saying, wondering why you prefer GDX versus GDXJ. Yeah, I mean, so it's just the junior miners versus the miners, right? So in general, the volatility in the GDX is good enough for me. If I wanted even more volatility, you could go to GDXJ because the miners trade, in bigger integers. But for the most part, I generally feel more comfortable sticking with the big boys when it comes to the miners, and that's really why I choose GDXJ usually. Now, again, are they going to generally trade together? Yeah, they should. So you could definitely choose GDXJ. Just realize that you're taking on more risk. Granted, more reward, but also more risk. Okay? Awesome, Abby. Abby saying, hope you had a great weekend. Joined a few months ago and really loving it. What are potential stocks on your radar for this week as swing trades? Also, would it be possible to give potential buy ranges for future purchases, stocks in a previous day's daily video? It's too tricky, and honestly, sometimes I talk about that in my daily videos, like where I like the level and so forth. But honestly, it's all liquid, meaning that it's constantly fluid. It's changing. So I would never want to put out a buy. I would feel so guilty, honestly, if I said, okay, guys, we're going to buy, Apple at this price, and then it gets there the next day, and I'm like, nah, I don't really like it now. It's just, it creates, and some people buy it and so forth, and it just kind of creates a mess. So basically what I like to do is just keep it so crystal clear. When I actually purchase something or short something, that's when I put it out for you guys. And this way, it's not a lot of questioning, like, did Gareth buy it there? He said he was going to buy it, and like all this. It is what it is at that point. In terms of swing trades for this week, I'm going to be focusing mainly on beaten down names. So Friday, you guys saw that I did flip from my short to my long on SE. You could see why. Huge support right in this range. Doesn't mean it can't go a little bit lower to this lower line, but in general, look at the sell-off here. 2, 4, 6, 7 weeks in a row down. That right there, if you've taken the methodology revealed course, is something to pay attention to. And then also, look at the levels. You hit this pivot low, you filled a gap on the daily chart, and you're very close to this 200 even number. So for me, a lot of these levels are very key. Other ones that I was watching, although it bounced on Friday, was NET. But if this sold, I think I even mentioned this in Friday's video or Thursday's video, if it got down to here this week, I would definitely be interested. I'm not going to guarantee you I'm going to buy it, but this is on my radar because it's getting oversold. And there's a bunch of other ones out there. So there's a lot of these technology names that were darlings of the market that are now just getting obliterated in the sell side action. And this is always what happens. These things go up for a certain amount of time. It's usually way higher than anyone suspects. And then when the bottom falls out, the bottom really falls out because everyone rushes for the exit at the exact same time. So that's why, a lot of times you'll see me just kind of slowly accumulating on a short or a long as it kind of goes in one direction. And then finally when it snaps back, it's such a mammoth move that it takes us in the money usually on most situations. All right. Aaron saying, what do you think about LMT for a short? I'm seeing an inside bar with time count on the weekly. Sure, let's take a look. I have the weekly up already. Let's see what we got. Yeah. I mean, 1, 2, 3, 4, 5, 6, 7. I like it. Nice little inside bar. Now, inside bars, I mean, if it doesn't play out this week, you could continue up. So just be aware of that. But yeah, I mean, certainly that is a classic bearish pattern. You also have a trend line right here to follow that if it could break this trend line right here, then it would get probably additional downside, probably all the way down in this range, 285 or so. So yeah, I think that looks good to me. Looks very good. David saying, will you enter QID again this week? It's all dependent on price action, right? So again, I can't tell you for sure I will. I'd be doing you a disservice if I said that because I might not. But if we get the right price action, honestly, I'd probably wait till the new year at this point because if we start to get lighter volume and we start to float up, I don't know if there's a reason to buy it again before the new year since between Christmas and New Year's, which is the last week of the year, the volume should be very, very light. Now, it doesn't guarantee it, right? We know that have been situations where the market's gone crazy during this period, but if it does float up, I probably wouldn't buy it 4 days before the end of the year with that float going on if the light volume has come into the picture. I'd probably just wait till the first trading day of the next year or something like that, okay? But again, let's just see how it plays out. Let's see what the price does and go from there, all right? VJ wondering about my positions or my views on adding to short positions like on Nvidia, on SMH, on Apple. Yeah, as of now, I don't plan on doing it. I don't think we need to. Like SMH, when this thing craters, I mean, look at this is the weekly chart on SMH, right? And look at the run on it and look at the corrective move. So, I mean, first of all, SMH is going to go here. This is where it's going to go no brainer down to 275. But then it could easily even break that just on a pierce and go down to here around 259. And eventually it's going to go here. This is going to be your longer term buy level on it down around $210. So again, if I have decent sized positions on them, at this point, I'm just going to let the market do what it wants to do and flush them out. Same thing with Nvidia. Nvidia's already pulled back significantly. We wouldn't want to add to a short. I hate when people add to shorts that after the stock has already pulled back significantly, because then you're basically saying, well, I know it could bounce right back up here, and then let's say you short it here again, and it goes right back up, and you find yourself, oh, well that sucked, So I'm much more intrigued by letting it do its thing, and at this stage, let it play out, let it do its proper price action. Anthony saying Biden's making an announcement on Tuesday about possible COVID restrictions. Is this something to be concerned about for the markets? It might be. I don't think that there's going to be any significant restrictions in the U.S., but it could be for more international travel getting restricted, stuff like that. But I don't foresee it as being an issue in the U.S. I mean, I think the U.S. has kind of made its position clear, which is, at this point, people are going to do what they're going to do. And I think Biden understands that. And in all fairness, I don't think Biden wants to push us into a recession, especially with the midterm elections next year. So I really honestly don't anticipate anything big from that. Again, if it's international travel that could harm the economy, maybe, but I'm not really sure at this point, considering we've had restrictions on international travel since 2020, if it's going to be that big of a deal to the economy here. The economy in the U.S. is mostly consumer spending driven. That's really what's been driving us for decades at this point. Ken saying, do you think CGC has bottomed or could still go lower? So in terms of canopy growth, I mean, if the markets collapse, then it absolutely could go lower. There's no doubt about it. I like that you got a daily bottoming tail here, and then you got a nice push up here, which you could argue confirmed on Friday. I love the fact that it was strong on Friday when the markets were weak. That's usually a good sign. So that's something positive as well. But again, let's be fair. If the markets all of a sudden are going to drop 10% in the next week, the idea that CGC could somehow withstand that kind of flush in the overall market, probably not. It probably would get driven lower. Do I think CGC is a no-brainer at these levels for potential buyout or, governmental chatter about federal legalization? Yes. Again, tuck it away, leave it be. Sub $10, it's awesome here. At some point, you are going to get legalization at the federal level because, as I've always said, the government needs revenue, right? We're spending money faster than we can even print it. Well, that's not true. The Fed can press a button and create trillions, but the idea is that at some point we got to bring in more revenue. We know that the Biden administration is already looking to potentially raise taxes, tighten loopholes, all that kind of stuff. One of the easiest things would be to just legalize marijuana. In all fairness, there's a bunch of states already where it's legal anyways, so I'm not really sure, just do it already, get it done with. I lived in Oregon where it was legal. I've been in other, states where it's been legal. Honestly, I didn't notice any change whatsoever in crime and anything, honestly. There was really no difference. It's not like personally it was no difference. So anyways, that's just my personal experience with it at this point, and if it can bring in an extra $50 billion a year in tax revenue, do it. More power. Simone is saying, I learned so much from your teachings. Can you look at NMTR chart, 9-meter biopharma? What is a great level to add? Sure, let's take a look. So let me bring up that. NMTR. Yeah, it's a very small stock, and so first and foremost, I don't know much about this company, Simona, but I appreciate the kind words, by the way. Thank you so much. Now, you do have kind of this big run up with this choppy kind of consolidation. So, you might get one more flush, but it looks like there's a lot of support around here. So, maybe a little bit more downside, but if you're a spec, this is a spec play, right? We knew this is a speculative play. So maybe around 75, 76 cents, you give it a shot. Again, I have no idea about their balance sheet. I don't know what drugs they're working on or anything like that. So you'd have to do your own due diligence on that. But certainly the chart would get me intrigued around 75 cents to 76 cents. Okay. Eric saying, if the market crashes, is it in a weird way, does that decrease inflation due to loss or of so many dollars in circulation. Yeah, it actually does. It does. So that's an important point, and that's kind of one of my points about why now that Jerome Powell knows that he has to curtail inflation, I don't think he's going to be as intent on holding up the stock market. So basically, what ends up happening is when the stock market goes up forever, right, which is what it's done for the last 10, 12 years, is that you get the wealth effect where people are seeing their 401ks going up, 10, 20, 30%. You have the crypto move, so you have crypto millionaires out there. You got stock millionaires because of AMC and GME and all these other ones. And it creates this wealth effect where people are just like, you know what? I'm going to go buy a sports car. I'm going to go take this vacation. I'm going to go buy a new boat. And it creates more demand because people feel really rich. So the inverse can happen, exactly, Eric, where the stock market drops 20 or 30% and people are looking at their 401ks and saying, oh my God, my 401k is down 30% in a month or two or 6 months or whatever it may be. What the heck do I do? I'm certainly not going to take that vacation that I was planning on taking. I'm not going to go buy that car. And all of a sudden you have this demand. Now, the problem with that is that eventually that filters through and unemployment will go up. So people are going to get laid off because there's not as much demand, which then breeds the question, at what point does the Fed step in? Because their dual mandate says that they have to monitor unemployment. So if unemployment starts going back to 6 or 7 or 8%, they're going to have to do something, which will then inevitably push the markets back up. But again, short term, do I think the Fed cares about a 10% drop or even a 20% drop in the stock market? No. I don't think a 10 or 20%er would be a big deal, because if you just look at the S&P this year, it's almost up that much anyways. So, I mean, taking away 1 year of gains, I don't think the Fed is concerned if it brings inflation back under control a little bit. The question is, when we do see unemployment spike, does the Fed have to print more money, which then creates that inflation problem once again? And that's a big question, right? Okay. Aaron saying, do you recommend exiting most, if not all, crypto positions in the coming weeks, months to prepare for a bear market? For me, I'm in a few positions pretty small. But certainly I'm being more conservative because I do view us in a winter, a crypto winter or bear market at this point. Like if you look a lot of the altcoins, I mean, not Solana and Ethereum, but a lot of the kind of the secondary ones, Cardano and some of the other ones, I mean, they're down like 75% from their recent highs. I mean, it's incredible the drops that we've seen in some of these. So I do think that's where we're headed. The cycles, if you look at the crypto cycles, they're generally approximately 4 years long. We've now had it since the last pivot top in 2017. It's been 4 years. Here we are in 2021. So it does tell us that there's a decent chance that there is a top in play in crypto, and that we likely will go into a more of a bear market for crypto. Now, again, if you're really someone who believes in the long term of Bitcoin, maybe don't hold a ton of it, but you could still hold some, and then you could just add when it goes lower. Add some at 40,000, add some at 30,000, add some at 20,000. Essentially dollar cost average, and I think that's fine if you're looking to build that longer term position. Again, I have small positions in some of the cryptos that I've picked up in my verified investing crypto, but certainly not a lot. And at some point, if Bitcoin gets like sub 20,000, I will buy a lot down there. All right, and I'll tell you one thing: when I do buy a lot, everyone's going to be so scared that they're not going to be wanting to do it. And that's the right signal. That's what you want to see. Just like in 2009, when the stock market bottomed out in March, I mean, it was so, people that were going long, I was going long, it was so scary to go long. That's the way bottoms are made, when everyone's freaking out. All right. Heath saying, usually every year you have some January effect plays. Do you think any conservative plays like Disney or Verizon that will be large bounces in January? Yeah, let's take a look at Disney's chart here. Let's see what they got on that. So the problem with Disney is that it's not down enough. So it is down for the most part from most of the price trading in, aside from just basically January of 2021 over here. But I really do think that a lot of institutions and hedge funds will still own Disney because it's a good quality company. So what I look for for my January effect plays, I kind of look for those second tier companies like a Viacom, a Discovery. Those would be good names to do it. Chegg, I think Chegg, by the way, I wouldn't be surprised if Chegg has a big week this week with the Omicron variant ripping. And take a look at the Chegg chart here, guys. Look at this cup and handle pattern. It's basically a bottom and then a bull flag, but it's known as a cup and handle. But look at the start of that move on Friday. And one of the things to keep in mind is, number one, this would be a great January effect play because if you go to the chart, so this isn't a name where a hedge fund holds it and they're so proud to show their investors, right? It's not like Disney or one of these big players where everyone's like, oh, I'm glad they own Disney. Disney's a great company. A lot of people don't even know that much about Chegg, which makes it not as conducive to keep if it's down a lot. So tax loss selling, yeah, on something like Chegg. In fact, it's probably dealt with a lot of that over the last few weeks. But then you have the scenario of the snapback for the January effect, and then also the bull pattern forming and the breakout potentially on that. And then also, with this Omicron variant spreading, and I mean, in New York, they're just getting crushed with the Omicron variant up there and in some other places. I mean, this thing spreads really fast. Doesn't appear to be quite as bad, but I've heard a lot of colleges have gone to online learning now, and Chegg is an online educator. So I think that's a very bullish thing considering the drop in this thing. I mean, Chegg was trading at above 110 earlier this year. So huge potential upside. I mean, first target, probably $34 and change. Second target would be this $40, just sub $40 level. And then imagine you fill the gap, which is all the way back to like 65, $70. So for me, anyways, to summarize, Heath, the January effect plays that I would look for would be more of the ones that are like secondary names. They're not like the top ones in the Dow, like a Disney, but they're kind of those secondary names. So you could look at even a Robinhood maybe Robinhood. I'm sure Robinhood's dealing with a lot of end of year selling. I mean, look at that chart, right? I mean, anyone who bought this year, except for people that bought on Friday, are down. This isn't a company that people are like, oh, that's Robinhood. Oh my God, that's like the blue chip of the world, right? So would be a secondary name where you could absolutely kind of say, okay, January effect, this might be a very valid play for Robinhood. Okay? So those, I hope you get kind of where I'm going with that. Peloton would be another one if that stays at its lows and kind of sells off into year end. Anything that's just been brutalized down 70, 80% from the highs this year, I think that's definitely what you're looking for. And you can see Peloton's exactly in that mix. I mean, Zoom might be a good one. Zoom had a big bounce on Friday because, it seems like the COVID variant's getting pretty bad. Again, as I said, I don't think the U.S. is going to lock down, but there's going to be a certain amount of people that just are not going to go out. Like I have elderly parents, and they're definitely more concerned than they were a month ago about going out and just being in public and being at restaurants. I mean, it's the mindset is starting to shift back a little bit into, okay, let's be a little bit more careful when we're out and about. So anyways, long story short, definitely a lot of opportunities for January effect plays. I will be looking for those probably in the final week of the year or in the first week of the new year. All right. Sheree saying, bank 20% day trading SPRB in 4 minutes on Friday, then started a swing position. Thoughts on overall chart? Sure, let me take a look at SPRB. Wow, that was a big move there into the end of that's quite something. So it looks like it's down a little bit after hours. I don't, Spruce Biosciences, again, this is another small biotech. I can't pretend to know what the heck they do or what the news was in this situation. Great move. Just be aware, anytime a stock runs up so much, there's always a chance it can retrace 50, 60, 70, or 100% of that move. So just be a little cautious on it. Even as much as that's down from recent highs, I'm a little, it's not something that I would buy after a run like that, having such a big move for me on a swing basis. Just doesn't fit my criteria. Okay. Brian wondering about Chewy. Sure. Let's take a look at Chewy here. Yeah, Chewy could be another January effect play. I would like it to sell off a little bit more into year end, but you can see if you go to January 2021, I mean, this was trading up here, and it certainly is lower than that. So definitely a possible January effect one. I see a major level of support on this around $46. $46 looks very, very good. Still a little ways away, but if we get some heavy selling in the market, it could easily get there very, very quickly. Speaking of selling, S&P futures now down 13 on the day or on the evening. Dow futures down about 132 on the overnight here. And let me look at the NASDAQ here. NASDAQ's actually holding up, only down about 9 points. So, I mean, it is down, but percentage-wise, it's barely down in the overnight here, which is telling you that tech may have a bounce to it. Tech got crushed kind of on Friday, maybe getting a small or setting up for a small bounce. Okay? Steve saying, just finished master course and it was amazing. Thank you. I believe it will make a huge difference in my trading. I just joined the room on Friday. I noticed members are helping as well. Do you guys send out a list of stocks to add to your watch list so I can try to help? Or should I just sit back for a month or so and just listen? Yeah, so glad to have you in the live day trading room, Steve. And I'm glad you did the master courses. That's fantastic. So we don't send out a list. Basically what we do is, so this is the beautiful thing about the live day trading room, is that we have people in there that have been with us for, basically since we started in 2007. They've been with us through 2008 or 9 or 10. We have people in there for easily 10 plus years. And they've all taken the webinars. They've been with us for so long that they know exactly what to look for in terms of the trade setups. So you're on the path to being one of them at some point. It's going to take you a little bit of time, but the idea is that it's not just Nick or I calling out trade levels and saying, hey, let's watch this or this. It's really a group now of amazing traders that are helping. We're all helping each other. Like a lot of times in the live day trading room, someone will bring a stock and say, hey, what about this level? And I'll recognize the name, someone who's been around for 7 years or 10 years. And of course, I'll bring that up right away because they know what they're talking about. And I'll be like, you know what, that's a great trade. And then ultimately I end up taking that trade as well and making money versus, just rooms where the head traders are just giving levels. So yeah, it's I would sit back if you're new and just kind of, look at what's being traded, look how the trades are taken. You've taken the webinars, so that's going to be a huge step to understanding that. Okay. Kevin saying, do you have a big list of day trades that have been converted to swings? No, just a few. Yeah, like Discovery, a little bit of Chag, yeah. Archon's a very tiny position. That was just a small cap we kind of dabbled in, but that's really about it. Yep. Aaron saying, thanks, Gareth. Awesome. Yeah, you're welcome. Eric saying, I believe you manage a hedge fund, correct? How do we get involved with that, and what's the minimum investment? Yeah, so I'm still in the process of getting it set up, but it will launch probably in the first quarter of 2021. Minimum entry is $500,000 to get into the hedge fund there. So I'll keep you guys posted once we're live and once we're rocking and rolling, but we're really taking our time in terms of making sure that everything is covered. I want a good team in place to manage everything and to kind of deal with the paperwork. I'll be the one doing all the trades, but I want a good team around me that's going to do everything that needs to be done and do it correctly. So I will absolutely keep you posted, Eric. But again, the minimum investment is $500,000 for that. Big John saying IQ might be a good January effect play. Yeah, again, the China plays, I'm sure there's a ton of December tax loss selling, since almost none of them are up for the year. Actually, I don't think any of them are, frankly. Here you can see the chart on that. It did have a good day on Friday, which was nice to see. But again, with China, there's a whole, yes, you have the January effect possibility, but it's going to come down to China. China has to say that they are done with their regulations. The one positive thing I did read over the weekend was that the Chinese government was meeting with the U.S. to work on the delisting requirements, to basically, for the audits of the Chinese companies. So those are things I look for. Like, that's a good thing. If the U.S. and China can reach an agreement, and China basically said that they were open to an agreement, whether they are or not, I don't know, but they said they were, in terms of the U.S. reaching a compromise in what sort of data they're going to get. Because from what China says, they're worried about, compromising people's, security and so forth, which is fine. I understand the U.S. is concerned about that as well with foreign entities. But the question is, can the SEC and the Chinese government reach a combination that is okay for both parties? If that occurs, that would be epic. You would see a lot of these stocks, like IQ would go up 100%. No doubt in my mind that would be a $10 stock almost overnight. Maybe not overnight, but almost overnight. You take away that fear of investors. So yes, January effect plays maybe with the Chinese stocks, but I think it's more so like you got to see some progress on relations. You got to see some progress on this delisting risk and those type of things. All right, guys, I am going to get going. Lastly, again, the S&P futures trading down 12 on the overnight, so we are still down a little bit. Not a huge move. Oil trading down $1, gold up $1.80, copper's down about $0.015. Have a wonderful night. Thanks for coming out tonight, guys. And again, let's see what this week brings us. Take care.